I'd now like to welcome Jeremy Oppenheim to the stage. Jeremy is the founder and managing partner of SystemIQ, and he's going to talk to us about financing systems change. Hi, Jeremy. Thank you. Welcome.
Great. Well, what a panel to follow. I'm going to, actually it's systemic, but we'll work on the branding later. So I'm not going to sit down. You can all stand up if you want. I'll stay seated. But I'm going to talk a little bit about the real economy and then move from that to talking about finance. I mean, I heard the last panel. I recognized many of the numbers that were in fact generated by think tanks like Systemic. But I want to start with the real economy rather than the financial economy because I think it all starts there. And we've just been working on land use, food systems and land use over the last couple of years. And it's really interesting when you start looking at food and land use systems. And they don't seem to get much attention from the finance community because, of course, the numbers are relatively small compared to the things that we talk about in infrastructure and energy and buildings and transport. But it turns out that part of our economy is absolutely central to delivering the SDGs and the Paris Agreement. Just to give you some flavor of numbers for a moment, when you take the global market value of the food and land use system on an end-to-end basis, so from the agricultural piece through the supply chains and all the way through to food services, the global value added, if you will, of the food and land use system is about $10 trillion a year. So roughly, 12, 15% of global GDP. When you take the externalities that the food and land use system generates, the number comes to $12 trillion a year. And we think that's a highly conservative estimate. So what we have is externalities in terms of public health, which range from undernutrition to overnutrition to the impact on air quality of the way in which we grow our food, through to obviously the whole environmental agenda, where it again is in part about climate, right? In large part about climate, but it's also about biodiversity, and it's also about soil erosion and water pollution. And then you add in the fact that there are over 2 billion people living in the countryside who are still living in a state of extreme poverty because, of course, they're out of sight and therefore out of mind. And you get to roughly $12 trillion of, if you will, unpriced externalities that are at the heart of our food and land use system, and of course are why food is so quote unquote cheap in much of the world. What's propping up those economics is one other factor. And I promise you I'll get to banking in a minute, but I'm going to just take a little bit of time to ground us in big numbers, but the real economy, because it comes down to what kind of economy do we want to build, and how does finance play a role in building that economy? It's not finance for finance's sake, and we all know that. So in the midst of this $12 trillion of externalities that are unpriced, there's about, and you can pick your number, right? The most conservative estimate of the level of support that's provided for this economy, this food and land use economy, is $500 billion of public funding that goes into propping up a system that has the characteristics I've just described. A somewhat, I think, more realistic view of the real, if you will, subsidies and support that are provided for the food and land use system we have is $1 trillion of money that is quote unquote public money, but of course it comes from you and me in the end, right? That is propping up a system that is creating not just these externalities. I mean, it would be one thing if it was just creating a little bit of damage in the way that we put numbers against. But of course what it's doing is creating absolutely extraordinary risk, right? There is not a piece of our global economy that is, if you will, neutral to the risks that are accumulating within the food and land use system. Because of course, as we cut down trees and we erode our soil and we destroy our oceans, what we're doing is undermining the basis of life, right? And believe it or not, without that life, the financial system wouldn't be functioning quite as well as it does today, or badly, depending on one's view. So we have up to $1 trillion of public funding from you and me, one way or another, going into propping up a food and land use system which is, in the terms I've just described it, good at delivering, quote unquote, short-term, cheap food, but very bad at delivering, if you will, a resilient, low-carbon, just, socially just, and environmentally sustainable model. Now, I'm going to bring this one level down, right? I haven't yet met a financial institution that has priced any of this into the way in which they really act, right? They're not pricing in all of this stuff into the way in which they think about their balance sheets or their investments. I haven't met yet a financial institution that's refused to provide funding to companies that cannot tell you whether their food is actually creating a public good or a public bad, right? So tell me which financial institutions have said, we're just not going to finance, a range of the big food companies whose products are actually generating many of the top health risks that we have in the world today. Let me go one step further down, right? We know that one of the most amazing, there are two amazing products in the world. I mean, there are lots of amazing products in the world. One amazing product, of course, is plastic, which turns out the reason that plastic's a problem is it's just too damn good, right? It's too useful for too many different things. And so we end up using too much of it because, of course, none of the externalities have been priced. But, of course, the same is true for one of our favorite products in the food system, which is palm oil. Right? The reason that palm oil is a problem is not because palm oil is intrinsically bad. Right? Palm oil is incredible. It is photosynthetically one of the most amazing products, and certainly by far the best vegetable oil you'll find. Right? But it's just too good for its own good. Right? And for our own good, because of course it spreads everywhere. And if you then turn around and you go to the next level of the, if you will, the Russian doll here, and you ask yourself the question, what would it take to get smallholders not to cut down the next hectare or two of rainforest or burn it down, not cut it down, in Indonesia or in parts of the world to which palm oil is now spreading, in Central Africa and broadly in sub-Saharan Africa? What would it take for those smallholders who in many cases already have a hectare or two and that grows palm oil at roughly 2 tons per hectare, when we know that they could get 8, right? You need finance, right? You need finance. And actually, when I go and talk to people who are some of the smallholders and then people who work with them, they cannot get the finance to invest in raising the productivity of their 2 hectares to go from 2 tons per hectare to 8 tons per hectare. And if they can't go from 2 to 8, they can't feed their family, and they're going to cut down the next 2 hectares of rainforest. And that is at its essence, and I've deliberately picked a real-world example, but that challenge of, on the one hand, the fact that the whole food system and land use system upon which we utterly depend is generating not just static externalities, but dynamic risks that are completely unpriced in the finance sector, through to the fact that because of that, all the financing, most of it, overwhelmingly, is going into players that have balance sheets that are essentially, if you will, creating the products that are at the heart of this problem, with no question. Nobody goes and says, let me just ask you a few questions right at the CEO level. Not a question. No question. I've yet to meet a financial institution that has done the analysis which says, what if we were to redesign the subsidy regime, right? The $1 trillion of subsidies on which actually farmer profitability in its existing format depends. What if they got reshaped in terms of the way in which the subsidy regime ought to work? What would that do to our balance sheet? What would that do to our asset quality? What would that do to our risks? I've yet to meet the financial institution that does that. And I've yet to meet financial institutions that have figured out how to, without massive helps from blended finance, in a very micro setting, go and figure out what it would take to get successful in supporting those smallholder farmers going from 2 to 8. Because if we can't do 2 to 8 on palm oil, we are honestly toast with the rainforest, right? And then everything else will unravel quite predictably. This is not something we don't know. This is something that we can absolutely describe from there. So I wanted to give you a sense of where I am, right, in all the work that Systemic is doing, right? We ran the Blended Finance Task Force and showed that the mobilization numbers by the MDBs and the DFIs are nowhere close to where they need to be. But frankly, we also don't have the local capacity in most countries to develop pipeline. We certainly don't have sanctity of contract in enough countries. So we've done that work, and we've done the 12 trillion number from the Business and Sustainable Development Commission was our number, right? Supported and endorsed by a bunch of CEOs, but nonetheless, right? We know that there are these prizes out there, but the reality is that we are stuck, right? If you go and look at 2010 IEA projections for the energy economy, if I just switch us from food to energy for a moment, and remember it's all energy at the end of the day, right? We just consume some and we put the rest of it in cars and factories. But what did their 2010 business as usual emissions estimate look like? Not the new policy scenario or any of the 2-degree scenarios, but the business as usual scenario predicted the emissions that we have in 2019. So we're on the 2010 BAU trajectory of the IEA at the moment, right? That is a very, very unhappy. So you shouldn't be sitting down, right? Because actually the risks are really beginning to skyrocket. I could probably go on for quite a while, but let me just describe in what I think some of the critical actions are. And I'm coming to a view which is not the one I held 2 or 3 years ago, which is that we're going to have to be a lot more radical than we have been so far if we want to get anywhere close, right? Because we're so far off track, and the lock-in that we have in our financial system and in our real economy and in policy setting, I mean, the lock-ins are so profound, right? When you go and talk to bankers, and I'm sure that many of you in the room, and they will explain to you one more time why it really does make sense for, even in this, given the risks, for Aramco to launch its IPO, and that, you know, it's fine to have another $2 trillion company influencing the political economy of countries across the world. What's really going on is that the fees that are being offered, and I'm being a little bit cynical here, but by the Aramcos of the world, will be massive, will be absolutely massive. And even if the institutions and their CEOs aren't saying that they're seduced by those fees, I can guarantee you all the way down to the front line that the incentives operating on an individual agent, on an individual investment banker, to be part of that deal are massive. They're absolutely massive. And they swamp anything that my 2-ton to 8-ton smallholder can ever offer. What can that guy, or woman often, offer to compare with what Aramco's offering in terms of fees to the banks and other financial institutions? And the answer is absolutely nothing. So we have a problem. And I think one of the things that we would be well advised to do is I don't want to just polish the problem, because I'm going to offer you 2 or 3 views as to what we need to do. But I think we need to recognize just the scale and magnitude and depth of it. And unfortunately, while I 100% applaud everything that was said on the previous panel, and I understand that world pretty well, and have been part of it in many respects, I don't believe it's going to get us close to where we need to get to in terms of the transformation of the real economy, let alone the complementary transformation of the financial system. So let's just talk about 2 or 3 of the things that might make a difference. And they're all in the completely unthinkable bucket, right? So let's recognize that these are unthinkable thoughts that rooms like this ought to think about. Right? Because if we don't think about this stuff, because everyone here actually cares about this stuff. The other 99.9% of people, frankly, marginally care or don't care. Right? But we need to go into much more of the unthinkable space, because we're not going to get there by another complex blended finance structure, one at a time. Right? We'll get somewhere, and it's really good stuff, but it's not going to bend the curve, given what we've locked in. So things that we could do, we all know that it starts with policy. Right? Let's not kid ourselves. The banking financial system responds on the whole. It doesn't lead. Right? It responds to market signals and prices and reevaluation of risk and return, one hopes. But we will not get this right unless, as a community, we not only pay lip service to and say we should have a higher carbon price and other relevant externalities and fix these fossil fuel subsidies and all the rest of it, but we've got to start reflecting, even if governments don't do it all, some of this in the way in which we price risk, price assets, think about returns, decide what to invest in and what not to invest in. And if we continue going, well, actually, the policymakers are not going to do it, so we'll keep on investing because we can always somehow sell off the assets just in time, then we're part of the problem. So there's a huge piece about this that is getting behind policy and figuring out how to internalize it within our own organizations. How does that really look if we were to do that, even if governments won't go there? I do believe that we need to be pushing for a very fundamental shift in the role of the IMF. Right? I don't understand why we have Article 4 surveillance as an example, and it's only an example, which doesn't incorporate this conversation front and center. Right? The IMF is supposed to be looking after the stability of the global economy, and we are sitting here on an economy that has the seeds of unraveling growing up very, very powerfully within it. So we need to get institutions like the IMF, right, to play a very different role. The arguments for forms of quantitative easing that are tilted to what we will be in my best estimate is that we're going to be in a low interest rate environment for a very long time. There are very good reasons, deep, deep structural reasons for it. But if we keep on just providing the money neutrally across the system, it's going to keep on investing in the easy stuff, because that's what we do, because that's how everything is geared up. So we will have to find a way to shift forms of quantitative easing and the use of other monetary instruments into much, much more aggressive SDG/climate-related investing. I'm of the view that we should be shifting the model of capital adequacy. Right? I don't think we have got the right Basel III and in the insurance sector Solvency II type approach. Right? We've got to start penalizing institutions that are holding high carbon assets or other assets that very clearly, very simply contribute to the world that we don't want for our kids. Right? Why would we keep on, in effect, supporting a regulatory system that gears money in the wrong direction? That does not seem to me to be what any of us would deep down believe is the right thing to do with our own savings, let alone the savings for which we are fiduciaries. We have got to work with the asset owners in a very different way. Their mandates today are just typically, not in all cases, there are wonderful counterexamples. And we all know of the Scandinavian story or a little bit of the foundation world acting with their endowments in a way that is truly aligned with the world that their endowments are supposed to be supporting. But it's not all of the foundation world, and it's certainly not enough of the institutional owners who are creating where is the template new mandate that offers a very different set of incentives, a radically different set of incentives to the asset managers. Because the asset managers will do what they are told to do, right? They respond very rationally to incentives. We are desperately lacking some of the information that we need, right? And this idea that we're going to get there with voluntary disclosure is honestly for the birds. It might have been fine if we'd started 20 years ago, but it has to be driven in a different way today. And I do agree with one of the other observations that was made, and that was really interesting coming from DFID in the UK, and that is that I do think that people want to know where their money is going and what it's being used for. And I think it should be a 100% absolute mandatory obligation on financial institutions and the pension fund managers and the like to help us all understand where our money is going. Because at the moment, I will put my hand up. I may be the only one in the room. I can't see anybody. So I'm not going to ask you to do this. But I actually don't know where all my pension is invested, right? And I've tried, and it turns out to be quite hard to get the data you want, even if you push hard. And that needs to change dramatically. So I'm in the camp which is we absolutely need to do the billions to the trillions. We need to shift those trillions in the right direction, not in the, more of the same place. I think the financial system has an astonishing role to play. We will not get there without the financial system transforming itself as part of a deep fundamental shift that we need. But my acid test to you at the end of the day will be to prove to me that the financial system is going to be as responsive to the smallholder who needs to go from 2 tons to 8 tons per hectare, and that we'll find a way to do that, and we'll make that the source of the real, if you will, career paths, the aspirations, the big returns to people in the banking and financial system, and not the Aramcos of the world. Because until we change that, we don't get to where we need. Thank you all.
Thank you.